I think, starting from September, we have had this slew of policy measures, stimuli, first starting with monetary policy, and now this announcement on fiscal deficit expansion. So I think they're going in the right direction, but at the same time, it'll take some more time, in fact, significantly more time to reflate the Chinese economy. The kind of deflation that we have seen of late is not easy to get over with. The most encouraging sign is the change in policy direction in the CWC meetings. Now the focus seems to be on consumption and not the old style supply side measures like, encourage investments and so on. So that, I think, addresses the weakest link in the Chinese economic growth pattern, which is consumer confidence. And that is possibly the most important factor to focus on for investors.
Indeed, that seems to be like the most important factor to focus on for investors. Do you see direct consumer handouts to boost consumer confidence?
That historically has not been Chinese style. We've known that the present leadership has not really been, in favor of the US style helicopter money. So I think China will find different ways to support consumption. There has been talk about encouraging investment creation, job creation, investment, employment generation. And I think going forward, there will also have to be a coordinated policy response, not just fiscal and monetary policy, but also what happens with the migrant labor. Are we going to change the hukou system? So a coordinated policy response is what we should have to look forward to.
Okay. I do want to understand what that coordinated policy response would do for growth in China.
I think what it would do is not only in terms of the headline growth, but a change in the pattern of growth. Last 3 years, China has been growing entirely because of export growth. Obviously, that's not, something one can rely on in the upcoming world, where tariffs and geopolitical tensions are possibly likely to increase. So hopefully, we're going to see a more sustainable growth driven by domestic consumption and not so much by exports or external demand. So the pattern of growth would possibly shift from external demand or the developed market demand to domestic demand. That opens up many investment opportunities for investors.
What is the one theme that you think investors can hang their hats on and take a bet?
Domestic consumption. In a sense, if I am positive on Chinese equities right now, it is the most undervalued and underowned, possibly in the entire Asian universe. I am looking strongly at consumer discretionaries, and that includes the athleisure, the beverages, select internet, not the broad brush entire, internet and social media related sector, but selectively, and also healthcare and pharmaceuticals. So I think largely, the things related to domestic consumption and particularly consumer discretionaries, I would possibly add select few electric vehicle manufacturers also to that, to that universe, are something to look forward to. Don't forget the dividend yield plays, not so much the property sector, but more the banks and financials. So that really should, possibly be the focus area for equity investors in China.